Stocks end higher as investors digest trade developments and brace for data delays. U.S. stocks finished higher after investors weighed trade headlines and prepared for government data delays tied to the shutdown. Gains were broad, with technology and industrial shares advancing as traders reassessed the likelihood of near-term tariff escalation. Market participants said moves were restrained by thin liquidity and hedging ahead of major earnings. But the upward bias suggested some short covering and dip buying. Bond yields were little changed, leaving the equity risk premium a live debate on trading floors. With the inflation report pushed back, desks are leaning more on company guidance, credit indicators, and high-frequency demand signals to calibrate positioning. Banks and insurers were in focus as analysts parsed commentary on loan quality and deposit costs, while energy names tracked the week's pullback in crude prices. Options activity pointed to expectations for bigger moves around specific catalysts rather than a broad market breakout. Strategists said the next leg will depend on whether earnings confirm resilient margins or expose pressure from wages and financing costs. A constructive tone from management teams could sustain the bounce, while weak outlooks might quickly undercut sentiment. Currency and commodity swings remain important wildcards. For long-term investors, some argue that volatility is presenting entry points in cash-generating businesses with manageable leverage. Short-term traders continue to emphasize discipline, trailing stops, and intraday risk controls as headlines cross. With major data releases in flux, market narratives can turn on a single corporate comment, keeping attention firmly on microphones and earnings slides.